Hello traders, it's Roberto, and today is November the 2nd, Sunday, and we're about 2 hours away from the opening of the Australian market, a new trading week. And I'm just going to go over some simple strategies using a 1 hour chart and confirming them with higher time frames. So for example, on Friday, all the N crosses took off north, and they are extremely overbought. So let me just, that didn't work. 1 second, let me just unlock this. And we just take one chart at a time. Price above the central pivot point and above the 8 moving average line. So all the N crosses were in an uptrend, and they all pretty much exceeded their daily range. Let's look at the first one was the euro yen, and it put in about 312 pips, twice as much as the daily range. And then we had pound yen, and that was the big winner. It put in over 513 pips. Now, yes, we're in a strong uptrend on all these pairs, but this is not an ideal area to be buying. In fact, we should, if I look at the daily chart, we have a hammer all the way back in September the 20th. So this is going to be a very difficult area to break. So I anticipate some retracement on all of these pairs coming into Monday. Remember, Sunday to Monday usually is a retracement. So if the market gaps up and within a few hours, then we're definitely going to be having a Sunday to Monday retracement. Notice the stochastic, rather the MACD divergence, not divergence, but we have histogram is at an angle going down, and the two lines on MACD are getting close to cross. Now, they must cross in order for confirmation that we're going to have a nice retracement. We should have a retracement. The market's completely overbought. No one in their right mind would be looking to buy at these levels. So what do? If we're thinking of buying, then what you need to do is take your Fibonacci tool and draw from the swing low to the swing high. Now, just if in fact this is the swing high, it may gap up in a few hours when the markets open up in Australia. But if it gaps down, we will be looking for these areas of support for buying opportunities. Now the pivot points will recalculate, and we'll have different pivot points in a couple of hours. But we're going to be having 61, 50%, 38% retracement levels. These are ideal areas of support if this is going to continue to go north. Remember, looking at a daily chart, we have a previous resistance level. And what I like to do is take the whole wick of the candle and highlight it. And what I do is I call that a sell zone. Okay. Now, it's where there's an anticipation of the market retracing, because no one would like to be buying at a sell area, at a previous resistance or support. For example, here, the market, this was a solid red candle at one point, and look what happened. It closed inside a previous support. So the next candle may break above the swing high of this level here, but it depends where it closes. If it closes above, if the body of the candle closes above the swing high, then yes, then we would probably see a continuation pattern. But if we see something like we saw over here, where the market broke the previous support but closed inside the support, then we're going to be looking at a retracement. This is not only a retracement, but a reversal. So Mondays is not the best time to trade, and usually is a day that I like to look for retracement. Knowing that we're in a sell zone and this on the pound yen at the moment, we're going to be looking, we'll go to the 1 hour chart. This whole area is a resistance zone. So we're going to be looking for a retracement. And I would like to see the market break below the 8 moving average line, the body of the 8 moving average line, before I take a trade. So let's see what happens in a few hours when the market opens up at 5 p.m. Eastern. If it gaps down, then yes, most likely I'd like to short it because it is overbought and we are looking at a Sunday to Monday retracement. If it gaps up, then I probably just wait for a retracement to get in, or short if it's a substantial gap up. Let's say it's a couple of hundred pips, then I would definitely be looking to sell, because normally whenever the market gaps up or down, then it is substantial pips, like the daily average, or about 100 pips or more, then it's safe and it's just wise just to take a counter trend trade at that time. Let's take a look at a few other pairs, and basically they're all mirroring each other. Here's Euro Yen, and put over 312 pips, and we're looking for our retracement of at a minimum of 38% retracement level. Whenever, and this is a rule of thumb, whenever a currency pair exceeds its daily range, normally it will give back about 38% retracement. So here's Friday swing low, and assuming that this is the swing high of coming into a new trading day, here's the 38% retracement level, 50%. So that's about 75 pips away from where the market closed on Friday. So if the market gaps down, then yes, I would most likely like to sell, because we're looking for a retracement on Monday. So usually it's that Sunday to Monday retracement. When the market rallies on Friday, or it's been in an uptrend all week, then usually from Sunday to Monday the market retraces, and that's what we're going to be looking for. The same thing on New Zealand yen, the same thing on the Swiss yen and the Aussie yen. And that's it for the analysis. I'll do an update in a couple of hours after the market opens, and then another update for the Asian and European session. Those of you that are not part of the Pro Traders Workshop, just log, if you're interested in receiving these analysis and trade signals on a daily basis, just go to fxnorthwest.com. We offer a private coaching session, trade signals on a daily basis, plus analysis. Videos are sent to you twice a week. And we also have Trade Copier for those that are not interested in trading but would like someone to trade for them. Have a good trading week, and see you on the next video.